Hey there, Paul David Thompson coming at you on how to do owner financing. How does it work? What does it mean? And why do I like it so much? I'm a full-time real estate investor and I've bought a ton of properties using owner financing. It is my single favorite way to buy properties, and I'll show you why and how it works. First off, if you buy a property using owner financing, you don't need to find a third-party bank. You don't need to get qualified if you don't have good credit. Maybe you don't have a really big down payment. You can get some of the money or a lot of the money effectively from the owner's equity. And typically the seller has the property free and clear. I will cover in another video about how to do this with a owner wraparound. But today we'll keep it simpler and assume that the property is free and clear. The owner owns the property free and clear. They have no debt on the property. And it's a tired landlord, let's say, and they want to sell the property, but they enjoy the passive income of having the property, but they don't enjoy the active part of actually managing the property. Well, why don't you just buy it from them and you start making them payments as though they're the bank? Because that's what they're going to act like. So let's take a property on, let's call it 123 Main Street. Main Street. So just a simple little property. Rental property. I'm not an artist to deal with it. And they want to sell this rental property, and you make them an offer to buy it for, say, $100,000 with a $10,000 down payment, so 10% down, and you're going to make them payments of for the remaining $90,000 for $500 a month until paid. So what does that exactly work out to be? That is effectively a 0% interest financing. You just pay them $500 and they don't charge you any interest. That is one option. But if they're a little more shrewd and they understand that that's a 0% financing and they don't feel comfortable doing that, then they might expect you to take it longer to pay it, or to actually charge some interest. So you say, well, what kind of interest rate are you getting in the with the bank? If you were just to get the whole $100,000, what would you do with it? A lot of people just say, I'm going to put it in the bank and I hope I get 1-2% out of it somehow. Well, would you say, well, what if I gave you twice that? I paid you 3 or 4%. So let's say we do that at 3.5%. Do you think a seller might like that? They get 2 or 3 times what they might be able to get at the bank, but you could get qualified for a bank loan at 3.5% in today's terms is unlikely. So it's a win-win on both sides. You're kind of playing the odds of, or playing the differences between what the prevailing market would give you versus what they can get from the market. They're not a bank. They don't know how to go and basically hypothecate the money. So what you do is you start making them payments, and this might, I haven't done the math here, but this might take you 10 years to do that. Ballpark, I haven't checked the numbers. But so you're paying the property off. Once you make all these payments for those 10 years, let's say, then the property is paid for, and now you own the property free and clear, and they no longer have any sort of attachment to that property anymore. So how do you protect their interest when you're doing this? The same way a bank would. And this is how owner financing works, is you, the seller, or the seller sells it to you, the buyer, and you give them a promissory note. It's a legal document that basically says, I promise to pay using these terms that we described down here. And then you also give them a mortgage, basically attaching this property to this promissory note using the property that they just sold to you as collateral. So what scenario could a seller invest their $90,000 to $100,000, have the property secured by a property that they already have managed, and have it and get 3.5% interest without having to do any kind of work? That's why owner financing is such a compelling argument to sellers if you know how to explain it to them. You don't typically start off with a conversation, hey, Mr. Seller, I want to buy your house. How about we do owner financing? The default answer in most cases is no. No, you need to figure out what it is that they need. Why are they selling the house? What problems are they having? And would some continuous payments over time actually help solve their problem? And if it did, or if it would, then that would be a good offer to them and they might actually accept it once you kind of understand their problem. So it's very important to know that these are the two documents that you would use for owner financing. Those two documents are the same types of documents that you would use if you were going to a bank and you were borrowing money from a bank. You would give them a promissory note and a mortgage to promise that you're going to pay and secure the title to this property to that promissory note. So in the event that you didn't pay, the bank could foreclose on you and take the property over as collateral to secure their interest in the property. That's the basics of owner financing. I'm Paul David Thompson. I have a podcast called Ready Investor One if you want to listen in while you're working out or driving to work, or watch these videos. I have a few more up here about the next step on how to use owner financing and take it to the next level. If you like the video, give us a comment down below. How are you buying properties? Are you doing owner financing? What about it do you not understand? Give us a like, give us a subscribe, and the notification button is down there so you can be notified when new videos are coming out.